What's happening, everybody? I just realized 2 seconds ago that you weren't hearing any music at all, and that I don't like that. I must not have turned the music sharing on. Nice to see you guys here. I got some folks coming in from the waiting room. And happy Thursday, everybody. Stocks on the rocks. Everybody having a good week so far? Let me know that you can hear me in the chat box. This is a last one of the year. It is the last one of the year, isn't it? Wow. We should have had a Christmas party is what we should have had, Carl. Man. Well, you know, Chuck can't make these Thursday nights ever. So we wouldn't want to have a Christmas party without Chuck. We need to figure out what night of the week works for Chuck since he's so busy with his kids' sports and baseball and all that kind of stuff, so he could join us from time to time. He misses coming into these, but you know, Dad of the Year over there coaching 18 different baseball teams. I don't know if that's true or not, but Thursday nights. But yeah, they're good for me, so that's why we've been holding them here. But, you know, we might switch it up in the new year. You never know. We got some stuff planned for the new year. But, all right. What's happening, everybody? Stocks on the Rocks. My name is Corey Lane. I think I know most of you guys in here. But this is open to the general public. We send emails out to anybody who's ever interacted with Traders Army before. We open this up to for you guys to invite anyone that you would like to invite. So if I haven't met you before, my name is Corey Lane. I'm one of the head mentors, traders here at TradersArmy.com, along with Chuck Fulkerson, who's not here tonight, and then Herman Casas, who is also not here tonight. Herman usually doesn't join us in the evenings. He does a lot of trading rooms in the morning, so it's you and me tonight. So what is open office hours and happy hour? Well, it's exactly as it sounds. We have a little happy hour going on. So if you've had one of those weeks, have at it. It's not required. But, you know, at the end of the day, feels pretty good sometimes. But it's also a chance for us to just kind of banter about anything trading and investing related. I do not come planned to the Stocks on the Rock session with anything to talk about that I want to talk about. The things that I like to talk about throughout the week, we do in our trading rooms. We do 8 of them a week, so we come, you know, planned with stuff to do there. This is a chance for you guys to just kind of ask questions. Let's banter, let's chat. This is recorded, so you can go back and watch the recording. For pro members, you'll find it on the website, but if you're not a member of TradersArmy.com, you can also find it on our YouTube channel. So there's a link to our YouTube channel. Of course, you could Traders Army, you know, search for Traders Army on YouTube and find it there. So I'll be posting this after the session renders on YouTube. You can always catch these there. But since it's pretty much driven by you guys and your questions and how we go down rabbit holes there, this session could last anywhere between 5 minutes and an hour. And we always go the hour, so I'm thinking this is going to be no different. But if we run out of questions, I'll give you your evening back. And the first question up here, quick question, review on Tradier Futures platform. So are there any particular questions you have on the Tradier Futures platform, Miral? I have not traded futures on their platform. I hear it's a good platform to trade futures on. If anybody in the room has any experience with Tradier there, I downloaded Tradier as a platform, but I never really did much with it. The reason being is I'm primarily an option trader, and while they have a great options trading platform, there is one feature that I require to move all my money over to Tradier, and if they could just nail this down, then I would. And that is the ability to set up bracket closing orders on option spreads. So multi-leg option positions. And they don't support that. Thinkorswim does, which is a Schwab platform. They support that. So I've been trading over there for about 20 years. And I talked to Lex not too long ago, and he said that the CBOE is working on being able to support those types of bracket orders on spreads, and as soon as they do, and I get comfortable on the platform, there's a pretty good chance I'm going to be over at TradeSarmy as well. But for futures, here's what I hear. Insanely good margins, right? Insanely good margin requirements for trading futures contracts. And something that I also think is pretty cool is as long as you don't hold the futures contract past the close, you won't get charged overnight margins. But if you reopen the position in the Globex time frame, they still only charge intraday margins. And I don't know if that's true. I don't know if that's true for every other platform, but I think most other platforms, if not all, are going to tie up overnight margin overnight. TradeSarmy ties up intraday margin overnight, which I thought was very interesting. Their commissions are very low. I don't know about their subscription and platform fees. You shouldn't have any platform fees. Maybe if you are trading as a professional, meaning if you open up like an LLC or some sort of entity account that you're trading with, there might be some data fees or something like that. But other than that, I don't know that they would have data fees. And if they do, it's going to be very minimal. It might be like $10 a month for your CME data feed or something like that. But a great group of dudes over there. I do know that. I connect with those guys every so often, at least once every couple months. I connect with those guys just to check in on them, see how they're doing. They check on us, see how we're doing, all that kind of stuff. So, but I think for futures, I think, as long as you're comfortable executing on the platform, I think the low cost, low subscription fee, if you have that, low commissions, and also, the margin rates over there are far better than Thinkorswim, that's for sure. Thinkorswim, Schwab ties up overnight margins even intraday. So I would not trade futures through Thinkorswim, but for options on Thinkorswim, you had a question, and I can show you how to set up that order over on Thinkorswim for like a closing order on a spread or something like that. So, Miral, I'm going to get to both of your questions real quick, and then Bennett, I'm going to come back to yours in just a second. So I'm going to reshare my screen so that I can pull up Thinkorswim. Because you were only seeing the, what do you call it? You were only seeing the disclosure or the welcome screen there. So, Miral says, "Can you show once the spread is filled how to create a closing order using OCO on TOS?" Okay, so once an order is in, there's certainly multiple ways to do it. My favorite way to do it, generally speaking, is I spend a majority of the time in this platform on the Analyze tab. It's where I get my option chain. It's where I get my risk profiles when I build out positions. It's where I can simulate hypothetical positions. I've got my positions hidden right now, so I'll show them all. I don't have a position in Uber. But this is where you can throw all your what-ifs and build your trade and all that kind of stuff. And I'm generally in the habit of placing the entry with the stop and the target all at the same time. But if you are already in the trade, here's how you would do it. So let me come over here and let's see. Oh, I guess I do have a position on Uber. I had them hidden and I was in the wrong account. So let's pretend that I did not have a position on Uber. And by the way, this is a bear call spread. So what I did basically is I had a position set up to benefit from a fall in price out of this supply area here with a stop above 95.76. That's an important number. That's my stop. I collected, let me do the math on that, because unless I go back to trade confirmations, I guess I could go do that. Uber, I got 65-cent credit for a $2.50 wide spread. So that's important to note. So why is that important? Well, this is a credit spread where I want a stop loss above my, if it goes above my short strike and violates that stop. But I also want to close this out for profit if I can buy it back for, say, 6 or 7 cents. And that'll allow me to keep 90% of my profit potential. So if I'm over here in the Analyze tab and I can see my position, what I like to do is I like to come down here, and if I'm closing out these two calls, I want to place an order on these calls, I basically just left click and highlight both of those calls until they turn blue. And then I right click on that to create a closing order. And the first one here in the list is to buy back the whole vertical. Right now it's trading for 25 cents. So it's more than halfway to target, but it's not quite at target yet. So here's the key for OCOs in this platform. And that is when you automatically hit the, create closing order, it brings up a buy order to close this position. We need to come down here and change this advanced order to OCO. The default is always single. So if I try to create another order here and have one set up as a stop and one set up as a target, it's not going to let me add more orders down here because it only supports single orders. So if you change this to OCO, now what you can do is you can right click on this first order and create a duplicate of that, and now you'll have two down here. One is going to be for the target, and I said I would close this out for 6 or 7 cents. So I'll just put, I'm going to buy that back for 6 cents, limit price, good till canceled. And if the market's ever charging 6 cents for that, I'll buy it and I'll close it and keep 90% of my 65-cent credit that I took in. Now for this lower order, this is going to be the stop loss. So the stop loss was at 95.76. I'm going to type that over here so I remember that, 95.76. And I'm going to come over here on the bottom here first, change it to good till canceled. They both need to be good till canceled. And on the far right, you'll see this little gear cog over here. Make sure you choose the gear cog on the order that you're going to set up the stop. Because what we're going to do here is we're going to set what's known as a conditional order. So under the condition that Uber, and I'm just clicking underneath the symbol, it drops in Uber. Mark is the mid price. So under the condition that Uber is trading for greater than my stop threshold, which is 95.76. Enter, lock that in. Then there's two different, now that's the condition. If that condition is met, it'll send the order that we're going to customize in the upper third of this, in the upper half of this window. If the condition is never met and the stop is never hit, then it'll never send the above order. So the above order is to buy back. A guaranteed fill is to close at the market. And these spreads on Uber tend to be fairly decent. If you wanted to use a market order, guarantee you're out if your stop is hit, then a market order is not terrible. But I will disclose that you will get the worst fill at that time because the market order is a blank check. Okay? So market order will work. It'll get you out. Now, how I prefer to do it, but it doesn't always get you out, and I can pull this off because I almost never leave my studio or I'm always really close to my computer. If you are not able to get to a computer or close it out or manually close it on your phone, I would not choose this method that I'm about to show you because you could be in the position even after it hits your stop because we're going to be using a limit order once your stop is hit. Now, we have no idea what the limit, what the premium is going to be worth at that time. We can guesstimate, but we don't know what it's going to be. So what this platform lets you do is link the limit price, change this from the natural price to the mark price, which is the mid. That's what mark is, mid. That's the same thing here at Thinkorswim. So if you link it to the mark price, what this does is it allows you to put a limit offset, and it defaults to 0. So what is a limit offset? So what this means, whoop, did I close that window? I hit the escape key and it closed the window. I didn't mean to do that. Hold on a second. Just erased all my stuff. You get all that back. Greater than 95.76. That's an interesting feature. Don't hit the escape button on your keyboard while customizing this order. All right, so we are back at limit. Link the limit to the mark. And what this says is if this threshold is triggered and your stop is hit, Thinkorswim will identify the mid price of the spread, of the bear call spread at the time the condition is met. And if you don't put an offset, it's going to set a buy order right at the mid. And there's a good chance that order is going to fill. But if the spreads are wide or the market's volatile, the chances get lower that that order is going to fill. And you just want out. So what you can do is you can say, okay, I'm buying this back and I know that I might not fill at the mid price, but what if I offer you, 3 or 4 more cents above the mid? That's going to, for every penny that you go above the mid toward the ask, so we're offsetting toward the ask, which is adding more pennies, every penny you add improves your odds a little bit that your trade is going to get filled. And a lot of times it doesn't take much. You look down here where my cursor is, it says the mid is 25 cents, the natural's 32. We're talking a 7-cent spread between the mid and the natural. So I don't want to go all 7 cents because that's kind of like a market order. But I'll go 3 or 4 cents. I'll probably do 3 on this one. And I've already got this order staged, so I'm not going to add a second order. But this is how you would do it. So I'm offsetting by 2, 3, 4 pennies. And now I'm saying I'll pay 3 pennies above the mid. Close the trade for me, please. Now, it's not guaranteed because that's a limit order. So if you save that and you confirm and send, which I'm not going to do because I already have these orders waiting, double check that you want to buy these back for 6 cents? Yes. You want to buy them back for the mark price plus 3, for the mid price plus 3 cents to close it. So long as Uber is trading above 95.76, order number 2 will get sent to the market. And so send it, and now that's working on Uber, good till canceled. But I would always, especially on stuff that has a tendency to have, very dynamic bid-ask spreads throughout the day, I would always come over here and I would set an alert and say, right-click on that, create alert. If the price is above 95.76, stop is hit. Hold on. Make sure the bear call is closed. Okay. So what happens now is if the stop is hit, 2 things should happen. 1, I should get the alert, which I will get the alert that, hey, my stop has been hit, make sure the trade is closed. What I should also get is a trade confirmation that the trade filled. But if I don't get the trade confirmation, but I do get the alert, that tells me that I need to get back in front of the computer and manually work my way out, add another penny, cancel, replace the order, and work my way out of that trade manually. Does that all make sense, Miral? And this is on recording, so you can watch that back too. Cool. Love it. Awesome. My pleasure. So Bennett asked the question, previously you discussed your watch list for options. Do you choose from all 6,000 stocks, or do you set a minimum levels for such as ATR or market cap? Great question. So I definitely don't go through 6,000 stocks. I would never make it through 6,000 stocks. I don't think I'd make it if I started on Monday. I don't think I'd get through all 6,000 by Friday. Also, the idea that I trade options primarily. I rarely trade stocks. I don't trade futures really anymore. I mean, I haven't in a while anyway. I want to make sure that my stocks that I'm looking at are optionable and those options are liquid. So the scan that I have set up for this, I'll show you my scan settings, is this. Simple, straightforward. And you get to customize this. I started from scratch, so I deleted all the default filters in here and I started from scratch, adding filters. And I'm scanning in all symbols except for biotech stocks. I don't want to see any of those. I don't trade those, right? I don't trust those. So all symbols except for biotech, and I'm looking for stocks that trade as low as $7 upwards of $1,000, right? That's the range of stocks. And then I'm looking for options, open interest of at least 20,000 contracts collectively, right? So you can, I play with that number. Sometimes I'll do 15, sometimes I'll do 30,000, and it will change the amount of stocks that show up within the scan. The more open interest the options have, the fewer stocks that are going to qualify, right? But I think 20,000 has been a good number for me these days. Sometimes I'll experiment and go up or down, but 20,000 seems to be working right now. Average volume on the stock itself, which is the study filter, greater than 1 million shares per day on average over the last 50 days, right? So an average of over 1 million shares. And I do not want the stocks to have earnings coming up in the next 10 bars, which, because these are daily bars by this D over here on the right, it's 2 trading weeks. So if options are coming up in the next 2 weeks, I really am not going to trade them. I don't, unless, I'm trading some earnings strategy, which I don't really do, and I'm already probably too close to earnings at that point. IV is already really high, and I'm not going to do some sort of a earnings trade, back ratio spread, straddle strangle, things like that. because volatility's already increased. So I tend to stay away from trading earnings for all that reason. So, this is my basic scan. I don't really feel like I need any more. If you wanted to add things like ATR requirements, you could do that. I don't add ATR requirements because, as you can see, I have stocks that are all the way down as low as 7 and upwards of 1,000. So if you could pull off an ATR as a percentage of the stock, maybe, but what number would you put as an ATR, right? Would you say that, you put like a, $1.50 ATR at a minimum? Well, I mean, you could do that, but if a stock is $12, $15, $20, $1.50 ATR is huge. You're not going to see that stock, right? So I don't use ATR for that. I always know what ATR is because I have it listed over here next to the symbols, next to my scan. So my scan shows up over here. So all the symbols that are in my scan. So I have ATR right here, so I can see what it is. And I can sort by ATR too. So if you want to only trade high ATR stocks, you can sort by ATR. Come on. And you can see some of these have, $15, $20 ATR all the way down to, 4-cent ATR, 40 cents. I saw some 11 cents on there. But if you're trading directionally and you're looking for movement all the time, aggressive movement, I could maybe see where ATR would be helpful. But I trade I trade debit spreads and directional positions, but I also trade a lot of credit spreads. And with credit spreads, all my credit spreads are generally at the money or out of the money, so I don't need the stock to move, so I don't require high ATR. In fact, I would like to see low ATR. Right? So that's why I don't really put my ATR in here. And if you wanted to set up a minimum market cap or minimum PE ratio or any sort of fundamental information, you could add those filters. And here's all your fundamental data. Here's all your stock data. So you can see the criteria. Where'd that go? That they offer. Bid size, ask size, beta. You want something that has, high beta, high sensitivity to the S&P, market cap in millions. I mean, there's all kinds of filters you could throw in here. But what I find is when I'm looking at stocks that have quite a bit of open interest, I kind of filter out everything I need to filter out personally, but you can definitely, you can add as many filters as you want. Now, I hit scan, and this will tell me right here how many results are screened out. I'm thinking it's probably around 306. So that's all I got to look through. And I can get through 306 stocks. I can analyze and kind of filter out with my own eyes. I'll look through each one of these stocks each day. It takes me about 30, 40 minutes to get through just a quick overview of all the stocks, see if there's anything in there that catches my eye. And my goal is to filter down to a small list of, say, 3 to 10 stocks. Sometimes I only find 2 or 3 stocks. Sometimes I find 8 or 9 stocks. And then I want to do real deep dive analysis on those. Look at charts, look at trend, look at where we are relative to high time frame supply demand. Trade with the trend while we're in there. Identify some option positions and then maybe trade those. If they end up qualifying. But I do not go through deep dive analysis on 306 stocks. There's things in the charts that I basically want to. I'm looking for specific patterns. A rally, base rally pattern. That's going to look something like this. Little rally, base, rally. Prices are coming down. I say, ooh, EXE looks pretty interesting for next week. I'll keep that on my short list. So if I see slop, like, oh, we just broke above resistance. I don't see any near-term demand that I want to trade off of. I'm not going to chase this up. I don't really feel like there's any opportunity for me today in Alcoa. Now I'll just move on. And I'll just go down this list. And if there's anything that stands out, like here, Archer, I kind of want to see if this thing bounces off this 715 to 765. After this dramatic decline, it looks like it's starting to try to build a little base here with some bullish momentum. So it's close. So I'll keep that on a short list and just keep going down the list and filter out as many of these as I can, because I do not have the time or the energy or the patience, for that matter, to do deep dives on 306 stocks. Yep, so I quick scan looking at candle setups only, and then I will go in and I will start to build out option positions, look at the overall trend, see where we're at in higher time frames. So I use weekly charts for trend, and I use weekly charts to identify high time frame supply demand. Basically, are we coming up into an extreme high? I want to be mindful not to buy at those extreme highs very aggressively because we're coming up into a ceiling. And if we're coming down into a weekly support level or demand area, I want to be mindful that, this trend has been down for a while. I'm going to be real cautious about shorting in the context of that downtrend when we're coming into a weekly, support level, right? And that's a majority of like the chart analysis. And then I'll go into the option trading analysis and see which option trade might fit, credit spread, debit spread, what type of option trade. I'll look at where implied volatility is to know whether options are fairly cheap, fairly expensive, or somewhere in the middle. And we choose option strategy off of not only our directional bias or non-directional bias in the stock, but also our options priced to buy them, right? If options are overpriced and very expensive, I'm not going to want to buy those. I only want to buy cheap stuff, not expensive stuff, right? So that's kind of the general plan that I have when I go through my scan. And once you get your scan dialed in, this is the important part. Once you get your scan dialed in, you got to save it, right? Save your scan. I got mine saved as high volume / open interest. Save. And if you make any changes to your scan, you got to save it and overwrite it. And once you do that, you can populate a watch list over here that is the result of your scan. So now I don't have to hang on this window anymore right here. I can just hang on my chart window, select. I always sort mine by A to Z, alphabetical, and I'll start at the letter A, and I'll just kick back with a cup of coffee in the morning, and I'll just nope. Maybe in a few days, but nope. Maybe in a few days, I'll write that symbol down in a little spreadsheet that I keep for long and short potentials. Nope. Yeah, I mean, most of these are that's a nice little uptrend, but I don't know where I'd want to buy according to my, supply demand strategy. So yeah, I'm just looking for, what seems to be predictable movement on a stock, nothing too gappy, nothing too erratic. And then the supply and demand, rally-based rally, drop-based drop patterns that my eyes are, somewhat trained at this point to look at. And it does take a little while. I get, a much faster, a quick analysis like that. Think about it this way, Bennett. And this is going to say, most of you, if not all of you, have heard this before, unless you've never been here before. And if you haven't, then welcome. You're welcome every other Thursday with us. I call this process speed dating. And if you understand what speed dating is in like the actual dating world, there are these programs, there's these dating services where you can sign up to go speed date. They'll have 20, 30 people, I guess, 20, 30 men, 20, 30 women, and speed dating. And what happens is you spend 5 to 10 minutes at a two-top table talking with a person. And somebody's, kind of calling out, okay, time, and in that 5 to 10 minutes, you'll have to, a couple minutes to, look them over, see if they're attractive to your eyes. That's the first thing you'll notice. And then talk to them a little bit. You don't have time to get too deep, right? You got 20, 30 people to circle around and see if you find anyone interesting. But if you find a connection with somebody and you're like, you know what? I've been here for 5 or 10 minutes. Do you want to stay? Yeah, I want to stay. Let's stay. Let's stay a little longer. Now let's get into some real talk. You can stay there. And that's ultimately what you're looking for when you go to a speed dating environment. But I apply that same thing to stocks. And I would argue that every single person in this room, I would argue that almost every single person in the world, if I were to line up 100 people in a line, and this is your time, and you say, yep, I'm all women, all men, whatever, show me my preference. And with maybe a few, but some parameters up front as far as who you want up here, who you want to see for choices. I would say that in a matter of a few seconds, you could walk down that line of 100 people on looks alone. Say, nope, not my type, nope. Awesome, cute. Over here. Nope. Over here. Oh, nope. Yep. Nope. Yep. In probably 5 minutes, you could disqualify 90% of the people in that lineup. True or false? And I know it sounds shallow, but play along here. Right? What do you guys think? Yeah. I mean, it is what it is, right? You know what your eyes are attracted to. But you didn't know that when you were 10 years old. You didn't know that when you were 12. I mean, you start to kind of figure that stuff out when you're in your, mid-teens, Certainly by the time you're in your 20s, you're like, yeah, I know exactly what my type is. At least from a look standpoint. And so that's how you want to look at charts, right? Yeah, I've never been speed dating either, but I see people, walking around all the time, and it's just like, yeah, attractive. Yeah, not so much. Not for me. You know what I mean? So, I feel like we could all do it pretty quickly, and but you can only do that when, you spend time looking and so the more time you spend in front of the charts, the faster that process gets. And I would argue the more time you spend looking at a chart, you'll end up looking at the chart for so long. What you're trying to do is qualify the chart. You're trying to qualify this trade. Maybe you like the symbol. You heard something positive or negative about the symbol. And you're like, ooh, I heard that symbol. Let me go try to find a trade on that stock. To me, that sounds dangerous. That feels dangerous. Why? Because my job as a trader isn't to qualify stocks or trades. It's to disqualify trades. And when I go down this list, I'm disqualifying by looks alone quickly so that I can get to a short list. And that short list, I do the deep dive. And I want to disqualify as many of those as I can so that I don't get caught up in making stuff up or like justifying trades when there might not be a trade there. And the longer you look at a chart, the longer you analyze a trade, you will start to justify. You know what, I want to trade this so bad, and I know this isn't great, and I know that doesn't work, but I really want to, and then you'll start to justify, and that's not disciplined trading, right? So if I can disqualify as much as I can early on, and then I find a few stocks and a few option positions, I'm like, man, I'm trying my hardest here, but I just cannot disqualify this trade. I see no reason not to trade this. That's my cue. That's my job. I have to trade it, period. I have to, because I couldn't disqualify it, right? And so that process gets faster over time, but it's not fast for everyone, right out of the gate. You just got to get some practice in, get your reps in, build your eye on charts muscle, right? And that gets better. It gets faster. Do I miss good setups from time to time? I'm sure, right? I'm sure I do. But, there's tomorrow. There's 5 days a week that we can find setups. If I didn't catch it today, maybe I'll catch it tomorrow. You know what I mean? Although I know it's not recommended and risky, TOS provides a 5-year P&L history and quarterly P&L history that I like to look at as well. Oh yeah, you can do that. Yeah, if you want to look at their P&L, their their cash flow, you want to look at you want to screen for. You can look at all their fundamentals over here. You can see very quickly. Like AMCR, you can see what analysts are saying about it. You can see what the company does, what sector they belong to, all the fundamentals down here. And you could even set up screeners on that stuff if you'd like. Right? So I've not really gotten into any fundamental scanning or fundamental information. My belief on fundamentals is that everything knowable about the stock fundamentally is already built into the chart. Has to be, right? And so if it's already built into the chart, then I might as well just focus on the chart. But if that's something that you use in your analysis, I'm not trying to take that away from you at all. It's just been my philosophy for the last 20 years. And also, I guess I've seen too many companies, that cook the books. I've heard too many stories, and by the time we find out about it, the stock is getting hammered. And I'm not saying that every stock does it. I'm sure plenty do. I'm sure plenty don't. But tell me which ones do and which ones don't. And you can't. No one knows which ones do and which ones don't. And they may not get caught for a long time, but when they do, it turns south real fast. So I'm like, yeah. How do I know how much I can trust what the news is telling me, and how much do I know that I can trust that, these companies are not cooking the books to make their shareholders, hang on and their stock look better than it actually is. So I just figured, since everything knowable about the stock from a fundamental standpoint and a news standpoint is already built into the chart, I'm just going to focus on the chart. But I don't disagree that, it's not. If you lean on it, then I'm not trying to take it away from you at all. It's just another indicator, right? I'd be mindful about having too many indicators. You could get paralysis by overanalysis and never actually make a decision. But it doesn't sound like that's you. It sounds like you have a couple fundamental things that you look at to kind of support what you're seeing in the charts and support, some higher probabilities. And I'm totally cool with that. I had a buddy of mine, I talked to him not too long ago, but not super in depth. But I always remember he used to tell me, because he was a big fundamentals guy first. He was a big investor first, and then he started looking at technical analysis, and he got really good at charting. And what he would say is, fundamentals tell me what I want to buy, technicals tell me where I want to buy. I'm like, that's fair. I get that. So any historic indicator by definition is lagging. It is lagging, right? And that's why I say, my favorite statement is everything knowable, everything about the stock, every fundamental indicator is all built into what the stock is actually. It's all built into the chart. It has to be, right? So that's why my primary focus is this. That's all. But like I said, it's not wrong. It's just everybody's got their own set of indicators and tools and rules built into their trade plan, and you should have your own trade plan. My trade plan is not going to be the same as your trade plan. It's not going to be the same as Liz's trade plan. It's not going to be the same as Carl's or Kevin's or Mark's or Mike's or Miral's or anybody. Everybody's going to have their own little trade plan, little things that they find work for them over time that you work into your trade plan, things that stop working or change and you take them out of your trade plan. So that's a living, breathing thing, man. So, you're gonna have what works for you, and I think that's where exactly you want to be. Because as long as you know how your strategy makes money, you can go far with that. Trading someone else's trade plan where you don't even really know how it makes money, it's kind of hard to have confidence, long term. Yeah, Liz, for instance, forbids iron condors. I do not. Liz waits for closing candles for confirmation. I do not. Right? I mean, there's a number of differences between Liz and I, but both successful at what we do, because the most important thing out of all of this is how you manage risk. You'll never succeed in this business if you don't learn how to become the best loser you can be in this trade, right? You got to become the best loser first. Manage risk, heavy discipline. You could do all the work. You could have a 10 out of 10 score on your trade and it still goes bad. And if you are biased to that 10 out of 10, if it's a 10 out of 10, I'll just hang on a little longer. You didn't adhere to your stop, or you didn't put a stop in, or you didn't take profits when you should have. You didn't even take partial profits when you should have, right? That's not really, setting yourself up for a long-term successful, career. So you become the best loser, learn to manage your psychology around those losers, and your future looks really, really strong. Let's see. Let's go back up here. What did I miss? Question. I'm looking at the chat box here. Ryan, what's up, buddy? Can you help clarify in Thinkorswim, under today's option statistics, current IV percentile versus implied volatility, both expressed as a percent? Broadly speaking, I understand that current IV is evaluated relative to the minimum and maximum of IV in the past year. I want to include IV in the screener, but not sure which of those two to use. Great question. So IV, first of all, I have a gauge down here that we've customized, and this shows actually both IV percentile technically and IV itself, right? And so IV itself is not bound. Well, it's bound by 0 on the downside, but it's not bound by 100 on the upside. You can get biotech stocks that have 3, 4, 500% implied volatility, which is implying that over the next 1 year's time, the options are priced for this stock to move whatever the IV is. So right now on AMCR, The volatility right now is 30%. You see it over here on the far right, 0.305. That's a 30% implied volatility. So this is projecting that over the next 1 year, implied volatility and the options are priced that this stock can move up or down by 30% over the next 1 year. Back here when we were at 50 IV, this was implying that the stock could move up or down 50% over the next 1 year's time. And that's really high because we're going into earnings, and generally, implied volatility gets inflated. So there's no boundary. Implied volatility is a measurement of how much volatility the market is expecting as priced by the options market. And the more demand there are for options, the higher the higher the expectations will be, the higher the IV will be. The lower the demand for the options, or the more supply, the more selling of options there are, the lower the volatility is going to be. And that's just IV as a measurement of expectation for future volatility. IV percentile is bound by 100 and 0. And so you can see I have a red box up here and a green box down here and a white box in the middle. So the very top line, the very highest point that IV has hit would be marked as 100, right? And the very lowest distal line down here would be 0. And what I had this indicator set up to do is to break these up into 20 percentile chunks, basically. So the lower 20%, right? The lower 20 percentile, right? And the 80th percentile is up here, right? And that's the highest 20%, the lowest 20%. And then this is basically, if you were to break these up into 20%, this would be, 21 to 40 would be this percentile, and then here, and then here, and then basically break it up into 5 zones. You'll have 5 20% percentile zones. So you were looking at, let me delete all those lines, because you said you were looking at option statistics. Come on. Which I don't really look at these. Where do we find where do you find option statistics? I never use those. It wouldn't be under, I thought it was under the Analyze tab. Option chain for a stock. Yeah, but where would it be? Where do you click on the button? Like, where's the button to show me all the option stats? Is it down here? No, these are orders. Because I've looked at it, but I don't look at it at all, so I couldn't tell you even where the button is. If you know where the button is, tell me. Oh, there it is. I just had to collapse my option chain. So here's your IV high for the year. Here's your IV low for the year. And so if you were to break this range up, right, 100 and 0, current implied volatility is at 17%, which is about right here in the range. So we are in the 34th percentile, 0 to 100. So we're right at the lower third of the 1 year range. Does that make sense? So we're not too high in volatility. We're not at the top end of the range. We're not at the low end of the range. We're at basically at about 1/3 off the lows. So on my chart over here, that would be right in here. So zone 1, zone 2, 3, 4. So it's basically about in what percentile is that in. And we want to generally be buyers when we're in a very low percentile, 20% or less. We want to be sellers when we're in the higher percentile, the 80% or more. We want to be thinking about selling high premium, expensive premium, juicy premium. That's where you're going to get your best premiums for selling options. You're going to get your cheaper options in the lower 20%. Anything for me in the middle 60%, so basically from 21 to 79. This says 21 to 79, which this is 34. I would be using vertical spreads to minimize exposure to volatility. Does all that make sense, Ryan? Like IV percentile right now, Apple is in the buy options territory. We're in the lowest percentile, like very low percent, very low IV relative to where we've been. So we're at what current IV? Where's current IV? Implied by said 19%. Right, the lowest we've been is 18. We're at 19.36. That's why we're in the third percent, like 3 percentile. That's at the very, very bottom. Cheapest options have been in the year, right? You asked about CNC. 1 second. I'll get back to that here. So we might as well look at this while we're here. CNC is almost right in the middle of its high and low. So that's how you would use that. So I basically, instead of looking at these numbers, I use this gauge, right? And so if you're a pro member at TradersArmy, you can download this gauge. And if you're a Thinkorswim user, this is Thinkorswim specific. If you're a pro member at TradersArmy, then you can download the code for this Thinkorswim and install it, right? Because you'd have to have pro member access to get to the downloads. So if you're not a pro member, you're welcome to become one. I'll put a promo code in there, by the way, Trader60. Trader60. If you're not a pro member, that'll take 60% off your first month. Little shameless little plug right there for non-members or on-demand members to become pro members, right? But Trader60 gets you 60% off your first month. Then you could join us for all our trading rooms, all the fun and shenanigans that happens every day in our trading rooms, and get sweet implied volatility indicators and floating ATR indicators and all kinds of fun stuff. Are you calling IV percent the same as IV rank? Nope, they're exactly the same. Well, yes and no. So I have IV rank over here as a watch list indicator. It's a custom indicator. And this IV rank indicator actually references this IV range, this gauge down here, right? So this tells me, and I don't do this, but if you wanted to know quickly, I'm going down Alcoa. I need to set up an order. I know that Alcoa is in level 1, so I could buy long calls and puts if I wanted to. AAL, American Airlines, is also in level 1. If you only want to trade long calls and puts, you could sort by level 1. And what this is doing is it's referencing this indicator over here underneath the chart. And if the current IV is in the lower 20%, it's gonna tell me it's in level 1. If it's in the middle 60%, somewhere in between here and here, the white space, it'll tell me it's in level 2. And if it's in IV3, the highest percentile, it'll tell me which stocks are in the highest IV. So that's how I use rank, IV, and percentilers. I don't really use percentile because it's built into the IV gauge right here, this range. You follow that, Bennett? Cool. Awesome. All right. 10 to 15 more minutes. What did I miss? I miss anything? Let me go back and make sure I didn't miss any questions. I think I'm looking pretty good. How do you add a mark variable on the opening side of the trade? Are you asking like... Yeah, EXE is one I'm looking at. It's not ready yet, but essentially I'd be waiting for 110.20 to get hit, and then earlier I was looking at the possibility of a 105, 100, bull put. Pays 64 cents right now, so I'm not ready to get into it right now. Because if the stock goes below 105 and I stop out, I want to have the best risk reward setup. So I'm not really ready to get into it right now. I don't think this is pricing right. I think we're too far after hours. This is not pricing. Oh, and I'm sorry, we're all the way in January. Let me reset today. Yeah, that's more like it. Yeah, because I'm not risking $145 at my stop loss to make 64 cents. So I say if I put my entry price around 110 and a quarter, something like that, then what I can say is by the time, so now I'm hunting for the theoretical value of this option, right? So I know that my loss, if I were to get to my entry price, is not going to be $50. it's telling me it's going to be $50 if I enter this for 64 cents today. So I know that if I add 50 cents to this, right, then that's should be roughly $1.10 by the time 110.25 is hit. I'm anticipating the theoretical value of the option being around 110. Now I can get a better representation of what my risk is. It's about $100 if my stop is hit, as long as I get around $100 to $110 in credit for this single contract bull put spread. So if I'm like, yeah, I like that, and I'm going to go ahead and stage this order. Right click, create duplicate order. You could set this up as a first triggers OCO and set your stops and targets down here. I demonstrated that earlier, so I won't go deep into that now. So you have entry, stop, target. But I think your question was, how do we trigger the mark price on the entry? So you come over here on the entry here, and you click on the cog. And you got to set your condition. It says if EXE is trading for less than or equal to your entry price, or somewhere around your entry price, I want to send a limit order to the market, not a market order. I'm not going to take whatever they give me. I want to use a limit. But since I don't know what if 110 is going to be the number, link the limit to the mark. And since we're selling this spread, we're going to need to offset toward the bid. So I might say, I'll take a nickel less than the mid to fill this trade, but only if this condition is met. So that's staging the entry, and then you could, back it up with the stop and the target on the back end as a first triggers OCO. So the first order the entry would have to fill before the OCO bracket order would get sent to the market and start working. Is that what you were asking, Mark, Bennett? I think that's... Do I first look at the option spread? Is that the spread on the option? I'm assuming you're questioning, right? For sure, I would look at that, right? For sure, I would look at that. So let me just go ahead and get rid of these real quick so we can just focus on that entry order. I would have noticed that probably a lot long. Oop, don't let's confirm and send. I want to delete. I would have probably noticed that typically when I'm over here in the option chain, I'm looking at 105 by 100. And I'll say, if this is 88 by 103, that's, 15 cents wide. That's not too bad. If it were 17 by 45 while the market was open, that's too wide. If the spread is greater than the mid price of the options premium, I don't trade it, right? So I just kind of look at the spread on each leg first. And if the spreads are really wide during market hours, I don't trust after hours spreads, but if the spreads are really wide during market hours, like as we start to get more than like 30 cents, 35 cents, I'm like, it's a little wide because I'm talking two legs. So now we're talking 60 to 70 cent deficit on the spread before break even. Now I use limit orders to get in and out, so you can use limit orders to get in and out to manage that spread width. But spread width isn't just about slippage. If the spread is really wide, you may have liquidity issues. You might not have a problem getting in, but you might not be able to get out very easily, and the pricing will not be in your favor if you try to get out on wide spreads. So I would typically notice if a spread is too wide before I even build this spread, right? But once the spread is built, and I say, yeah, I like it. Let's do it. Create a duplicate order. Then I look down here and I see how wide is that spread from natural to mid. And I would, that's a little wide, but it's not terrible. I would definitely try to, kind of get that closer to the mid price, at the time of entry, which is why I only do a little bit of an offset. I don't offset like 10, 20, 40 cents or anything like that. So I usually offset by about 5 or 10 cents, and that's about it. If I can't get filled at that, then I don't want it. I don't have like 50 cent offsets. No. If I can't offset by a few pennies, 10 cents at the absolute most, and get filled, too wide. Too wide for me is if it's more than 30% of the mid price of the option premium itself. So the mid price on, for instance, 88 by 103. The mid price on that is what, 95 cents roughly, something like that. So this is a 15-cent wide spread, which is a little more than 10% of the options premium, right? It's not terrible, right? But anything, past kind of that. I don't have like a hard rule, like 10%, nope. It's 1 penny over, nope, right? But I'm kind of in that, if I can get it for no more than 30 cents ever, right? I won't want to touch that, right? I'm trying to think of an example. I think Uber after hours had some pretty wide spreads. That's not too bad, actually. It was only 10 cents wide. I'd be fine with those. And 10 cents wide on a $3 option. Like, that's a nothing burger spread. Nothing. Right?
Corey, hi. The problem
Hey,
is if
Liz.
you start doing multiple leg strategies and you've got that sort of dispersion on both legs, then
Oh, yeah.
it starts getting quite ridiculous.
It does quite, and I, as you know, Liz, because we trade together all the time, I trade primarily spreads. So I'm hypersensitive to, I've got 2 legs, sometimes 4. So a 30-cent spread on 4 legs, I'm considering that a no-go, right? A 30-cent spread on 2 legs, I'd consider that as long, but I'm also not using market orders, right? I don't use market orders. So if it's 30 cents wide and I can split that by using a mid price or some variable above or below by a couple pennies, then the spread's really only 15 cents wide now. So I do have my limits on, I'm not going to go less than this premium. I'm not going to go more than that premium. And if the spread is too wide and it's not going to fill me, I'm not going to force it. Right?
Well, I mean, there is a reason I don't do four-legged spreads, but that could be another one of them, actually.
It's a very good reason not to do 4-legged spreads. I mean, you already have your reasons, but if you
Yeah,
need
yeah,
one
no.
more, there's one more for you,
There it
Liz.
is. I had the weirdest spread situation yesterday. So I think where are we today? Tuesday morning when Chuck was on, I said to him I was looking to get into an XLU sort of bullish position. I was looking end of day Monday actually, and I just couldn't find a way in where the spreads were decent. And then I did find a way in yesterday morning actually. The
Okay.
spreads really weren't bad. So I got in the trade. And of course, I know we had FOMC in the afternoon, which I knew was coming.
Hmm.
Um, Shortly after that, price was nowhere near my stop. And at one point I looked and my P&L allegedly was more negative than the amount I'd paid for the trade.
I've had that happen.
And I mean, price was nowhere near my stop, so I didn't do anything with it. And now
Sure.
it's in the green. But is it actually physically possible to lose more than you pay for it on a bull call?
Well, technically, yes. If your order were to fill at that price,
Right. And I don't think it would because I think the problem was the call, the spreads, despite the fact that when I got in, the spreads on both sides, the long call and the short call, spreads were very manageable in both cases. But the
yeah,
short call, I think the problem was the short call, one side had gone to zero and the other side was like I don't know, $2.50 or something
yeah,
utterly, I mean, just
yeah,
completely off the wall.
yeah, yeah. And I've had that happen a couple of times. I mean, a handful of times. I look at it and I'm like, how am I down $500 in that position when the max risk is 250? I'm like, how's
And B,
that possible?
you're not even at your stop or even
And I'm
close to
nowhere
it.
near the stop. Then I look at the spreads and I'm like, oh, that's why. But to answer your question, can it fill beyond the max risk of the spread? And the answer is yes. I actually witnessed with my own eyes. I was teaching a class in North Carolina. This is when I was teaching back for Trading Academy, like in my early days. And this lady was in class. She set up a MasterCard bear call spread. I think it was like a 5-point wide, or maybe 10-point wide bear call spread. 5 points wide. Let's just call it 5 points wide. And credit card company started ripping. She was nowhere near her stop. Started ripping to the upside to the point where they halted trading on the stock. Visa, MasterCard, Discover, they halted trading, but she hadn't hit her stop yet. Minus, max risk is $5 in the spread minus what she collected. When they resumed trading, MasterCard had gapped above her stop, and it filled at $7 and change. And I'm like, how's that possible? That was like the first time I've ever seen that. And when I went into the spreads and I looked at them, they were like $2 to $3 wide per leg.
Wow.
And so her spread filled, because that's where it was a market order. Her spread filled at a $2 and change greater risk than had she had just left it and let exercise and assignment take place at expiration. So if you close the trade on a stop with a market order, you can lose more than the spread value.
Okay. Yeah.
And if that's ever the case, I'm not touching it, which I haven't had to do this, knock wood. I would just let it ride to expiration, let exercise assignment take you out, and then you are at the true max risk, which would be $5 minus your credit.
Right. Yeah. Wow.
You know what I mean? But yeah,
Interesting.
I saw that happen. I was like, wow, that happened. Okay. Market orders,
Okay.
good times. But MasterCard is historically, I don't know, I haven't traded MasterCard in a long time, but they have pretty wide spreads anyway. I don't even know what she was doing in the trade. I mean, 1035 by 1105, 1270 by 1410. Like, I mean, MasterCard just doesn't have the best spreads to trade anyway. So, but I think it was a known, as she was, she hadn't been trading options for, more than a few months. And, some things you just got to experience for yourself to know, oh, don't ever do that again. Because she was probably told not to trade. I guarantee she was told not to trade, spreads that are more than this wide and this and that. And it happened. I also told a guy in class once. I was in New Jersey, and I was preaching all morning long, all afternoon long on the first or second day of class. No biotech, no biotech, no biotech. The guy in class on the third day, he's like, I messed up. I'm like, what happened? He's like, I've been selling put spreads on this biotech company, put spreads, and the premium just kept getting juicier, and the price was getting further away from the spread, but the premium kept getting bigger, so I kept writing more contracts and writing more contracts. And he had 30 contracts. Yeah, and he had 30 contracts. I don't recall how wide the spread was. It doesn't matter in this case when you hear the end of the story, but the stock was trading for $42 and change at the end of class, day 2, and it was a biotech stock, and it opened at $6 and change the next day. So from 42 to 6.
Yeah.
So it blew through both his short strike, his long strike by a mile, and he was at max loss in one day. And I'm like, yeah, well, that's biotech for you. He's like, how could I have known that's coming? I'm like, you don't. That's the thing. So we went back and this was in a March. I remember the month was March. I went back and I saw in January in the news. I just went through FinViz and I went back to January. I was like, oh, here it is. This is the drug. It's third phase testing sometime in early March. It's not like earnings where they announce the day. It's like sometime early March. But I've seen stocks gap 60% on just a news that, oh, this drug is out. Except it's causing this massive side effect. It's killing people or whatever. It's supposed to be, helping children. Turns out it's killing them. I mean, and news comes out overnight. So I just stay far away from biotech stocks. And to be clear, Ben asked a question. Will you look at healthcare stocks? Yeah, I don't consider Pfizer or Moderna or GSK. I don't consider them to be biotech. Those are big pharma companies. Those are fine. They've got thousands of drugs. I'm talking about the little biotech stocks who may or may not even have a drug on the market, but they're counting on that drug getting to market and FDA passing it and all that stuff. Those got some high volatility. I say if you are going to trade a biotech stock, just establish an attitude of I'm willing to risk all my money in this trade on the off chance that this thing explodes on this FDA announcement, right? But you got to be able to take max risk, and you can only really justify doing that in options. But implied volatility on biotech stocks in options, you're talking 300, 400, 500% going into announcement. It's huge. What do you mean, is biotech a recorded industry? What does that mean? I'm not sure what that means. Not sure what recorded industry means. Mark asks, while I'm waiting on that answer, can I change my name on TradersArmy? You mean like on the can I go change it in the back end? Who do you want to be, Mark? I can change it on the back end. I don't think you can change it. But I can change it. Wherever you want to change it to, let me know. Just shoot me an email. I can change all kinds of stuff. So be careful with that, because I can change your name to some really funky stuff. I can give you a superhero name. Is biotech a market are they listed as a biotech under industry? Yes. Yeah, and that's where on my scam, I exclude biotech. So you'll go category. You'll go, how did I find these? By industry. I'm sorry, by industry, healthcare, biotech. There it is. Yep, there it is. And so I just exclude. So I don't see any biotech companies in there. But I do see like some other, big pharma stocks in here. So they end up in here from time to time. Here's Pfizer. That's in there. Mark from Mission Viejo, because South OC don't get no respect. So what do you want your name to be? Mark from Mission Viejo? You want your name to be Mark from Mission Viejo? MMV? All right. Okay. The whole thing, or you want the abbreviation? And by the way, all your invoices, all your emails, everything's going to come to you as Mark from Mission Viejo. Is that what you want? For real? I can do it. Pretty soon, everybody's going to be changing their name. Ooh, I want to be John, because Johns get better trade fills. Let me make a note of that here. And I'm going to do it. I'm going to do it, Mark. Now, I can't change it for you in Zoom. You have to change yours in Zoom, but I can change it in the community. All right. Appreciate all your interaction tonight. This has been awesome. It's about 7 minutes after the top of the hour. I'm just going to do one quick scan. Talking of CNC. Am I in CNC? Somewhere I am.
Well, I'd mentioned it a couple of times.
Yeah, I'm here. I'm in there.
Okay, good. I think I mentioned it, and then I got in like the next day, which was before the next time we had a session, and then I think you must have got in during that session. But today it finally had a
nice pop, yeah.
Pretty nice move. Obviously, it's got further to go, but there should be plenty of profit margin there.
It's broken above here and it's closed above here, so that's a good sign on as far as you're concerned, and as far as I'm concerned, that's a great signal too, because it closed above. As a fellow volatility trader, ever use Tasty Trade? Philip from Philip. I have not used Tasty Trade. I do know that it has the same type of as far as I know, they do have the same type of thing with Tradier where they don't do bracket orders on spreads. And I don't even know if they support conditional orders on spreads, like using the stock's condition to enter or exit. I don't even know that Tradier does that yet. So yeah, both of those I've never had really a hankering to try out, because I know that they just don't have certain features that it's a hard pass if they don't have those features for me, because between not only my own trading, but teaching and mentoring, and we have a hedge fund separate from TradersArmy that we manage and all that stuff. So I don't want to have to be I don't want to have to set alerts that my stop has been hit, or my target's been hit, and then, oh my gosh, I got to come in and close the trade manually. They have bracket orders on spreads, Philip? Because Tasty, I know that Tradier has bracket orders on single leg positions, but they don't have bracket orders on spreads. And I trade mostly spreads, so that's what oh, that's nice. That's nice to know. Well, one step closer. I like it. But I have not traded on Tasty Trade. I mean, I was a Tom Sosnoff follower when he owned Thinkorswim. I've been on Thinkorswim for 20 years, when Tom Sosnoff still owned it and TD Ameritrade had not bought it yet. So it's going to be quite difficult to get me off this platform, I got to be honest. I know it. I know it better than Thinkorswim tech support knows it, I think, a lot of times. For the most part. I mean, the stuff that I use anyway. I mean, I don't use every feature in the platform. But, all right. Did I actually get through all of the questions? Did we actually do it? I think we did. Yeah, I'm happy to check it out. Oh, thank you, Bennett. I appreciate it. Is this your first time? This isn't your first time here, is it? You've been here, unless you're a different Bennett, because I have another Bennett. But you were asking questions like you were maybe a, yeah. That's not this. This the same Bennett. It's the same Bennett. Joe Bennett. Is that your first name or different? Well, thanks for showing up. Appreciate you. B Germ, there it is. I love it. Yeah, you're old school, man. You're legacy. Do I use keyboard shortcuts for drawing tools? No. I just have my drawing tools that I use right up here. I don't use any more than these. All right, so I just have them set to show on every chart. Then I pin it. So if I want a drawing tool, I'll just go here. But, I mean, quick keys are cool too. I use a lot of quick keys for a lot of things, but nothing in trading really. I use the undo button, you know, delete this line. Oh, I didn't want to do that. Control Z brings it back. You know, you make a trade, it hits your stop. Control Z, undo, it gives you your money back. I didn't mean to do that. Carl asks, before we take off, without giving too much away, what do you have, guys, planned for New Year for TA? Well, yeah, I can't really give too much away right now, but you know, one of the biggest things, I think from a delivery standpoint, that I think everybody has at least probably found, is that I get questions still on where do I find this and where do I find that, and the navigation of the website sometimes. And I know where every little thing is because I built the doggone thing. And then we established this Discord community outside of TradersArmy that has been a pain in the ass for people who are getting DM'd by people pretending to be me asking for Bitcoin. And I'm just so sick and tired of having that and people feeling like they might, you know, actually get into conversations with me when I'm like, I will never DM you. I know you. I have all of your phone numbers. If I need you, I'll call you. If I have all your emails, if I need you, I'll email you. I'm never going to DM you in a Discord. So I just got kind of tired of that. And so we got to searching around for platforms that are like Discord-like communities, but private. Like locked, like no one's getting in. You can't sign up unless we let you in. And we ran across a third-party company that is basically a Discord-like community, so we can chat right inside. It's an app that's on your phone, so it's a legitimate app, but it's an entire learning management system, which, you know, I think is really important for student progression. And as far as like, I went through this course, I'm 30% of the way through this course, you know, and it tracks your progress and you can have quizzes built in. It's a real learning management system. And, you know, I kind of feel bad for folks who don't have any trading experience at all coming to TradersArmy, because I feel like, you know, we can teach, you know, we have courses that teach all that stuff, but, you know, we want to be more, you know, more established as a real learning management system to help people who are brand new progress through the program so they can get into understanding what we do in the live trading rooms more more easily and things like that. So from a I can disclose that we are going to be moving into, like, TradersArmy.com will basically be a landing page for here's who we are, here's what we do. You want to sign up, check us out. But when you go to log in to your community, we're gonna campus, right? So Traders Army is the landing page, and then this TradersArmy.group.app will be the campus, and it will be a trading community, and everything just happens inside that campus. So we'll delete the use of Discord. We're gonna, like, really trim down on all that kind of stuff, and just everything will happen within that community app. And it's it'll be a mobile app too, so it's a lot easier for everybody to kind of interact and communicate within that mobile app. Have I started building that out? No. Will I start doing that really soon? Yes. How long is that going to take? I'm not sure. But I'm hoping to get it out as quick as possible. That should help. That's going to help in a number of things. I mean, we've had a couple of, we get spammed a lot on the website, like bots trying to get in, and that takes up a bunch of RAM. And that's why the website's been kind of wonky over the past 2 days. And so that's my primary goal first, is to get that community app set up, move everybody over there. But there's some challenges that not challenges, there's things I don't know how to do, because, billing will happen over, I think everything's going to happen over there. Like, all the billing will have to be moved over there, and we'll still use Stripe and all that kind of stuff for our billing. But, so a lot of stuff we're going to move over there, and then we'll get into, other potential changes as well. But that's as far as I can go right now, Carl, because we need to nail down some time to kind of really build this thing out. But it is not Skook. I've never heard of that. I've not heard of that. School. I thought you said Skook. School. No, I haven't heard of that one, but I'm happy to check that one out too. I had a little run around with like a 14-day trial with Group.app, and it's Group.app is what it is. Pretty cool. So we would be TradersArmy.group.app. So our own little community there. So I've already got it reserved. So it's more of a deliverable and community style thing. Something I will be working on. I don't know if I'll be able to pull it off, but one of the instructors that I work with on the mentoring side of things, he's got this you guys met Jeremy Holland in one of Herman's morning trading rooms. And he's got 10-15 years of trading psychology and a whole course built around it. And I think everybody in here has been trading for a long time, knows that trading psychology is about, I would say, probably 80% of your success comes from your psychology around trading, and 20% is tactical. And so he's built this entire course. It's like nothing I've ever seen, right? I mean, yeah, stuff taken from different things, but he's done studies. He's worked with therapists, trading therapists. He's worked closely with Jared Tendler, who you met at one of our summits a long time ago. And he's got just an enormous background, and that's really his specialty. He's a futures trader, but that's his specialty, is in the psychology side of things. So I might try to introduce that as a course and see if I can get Jeremy to come teach it. As a live course, right? So, and then we'll have archived recordings and things like that. So as far as new content is concerned, I'm going to start trying to see if I can get Jeremy to come over here and hang out with us for a little bit from time to time, and really spend some time on the psychology side of things, right? So that's something that I really want to push for, because we have a little bit on that in the trade plan course, but I've never seen anybody really understand it and teach it the way that he does. Oh yeah, Dr. Woody was a snooze fest. Yeah, him and Russ Allen. But no, Jeremy's wonderful. He's such a great human. So yeah, I'd like to partner with him in some way. Tactical reinforcements is still there. It's still there. I'm not logged in. I'm not even logged into my own website. I gotta do math? Come on. All right, I'll do this and then we'll bail. I'll give you guys your evening back. Appreciate you guys hanging out a little bit longer. We always do. Come on, log in. So I mean, it should speed. I mean, and the web, the new app, the new community would be, hella fast too, which is what I'm really looking forward to. And I'm sure you guys are too. All right. So student resources, on-demand training. So come down here to on-demand training courses. This is as if you're logged in as a member. Here's the lessons and tactical reinforcements. Right. So here's those on-demand lessons that we recorded. If you purchase tactical reinforcements as a standalone live course, or any of these courses as live courses that we were teaching, you can go down to your live training courses and student resources. And here's your student resources for tactical reinforcements. These are the ones that we recorded and we traded, and we were doing the live classes, trade plans, strategic trader, futures options, all that kind of stuff. So it depends upon what you're enrolled in. Because these down here with this asterisk, these were a separate tuition because they were taught live. Some of them were taught live in person, taught live online. And they're all archived here. So if you've enrolled in one of those, they're all archived here. Everything's under student resources. Cool. All right. Now you're gonna love Jeremy, man. He's so hopefully I can get him. He's a young dude. He's probably in his late 30s. I don't know if he's in his 40s. Might be even in his mid 30s. But he lives in Utah. He spends a lot of time in Alaska. He spends more time fishing and sailing and scuba diving and snowboarding and he supports himself through his trading and a little bit of mentoring here and there. And so I'm like, man, I need to get you over here and do some stuff with us. So we'll see if he wants to do it. If the price is right, he'll do it, right? So we'll figure that stuff out. So that's all I got so far for now, but we'll continue to kind of unfold things as we go into 2026. Cool. All right, y'all. Can't believe it. Last stocks on the rocks for 2025. So, because all the Thursdays are holidays between Christmas and New Year's. And so, Merry Christmas, Happy Holidays. For those of you who only join us for Stocks on the Rocks, I'll see the rest of you guys who are in the community every week. But if you're only coming in for Stocks on the Rocks and checking us out for now, Merry Christmas. Happy holidays. Happy New Year. Be safe. It's time to get those 2026 goals together. And, man, let's do 2026 right. And then 2025 in a big bang. All right? Awesome, guys. Appreciate y'all being here. Again, anybody who wants to explore the Traders Army community as a pro member, I'll throw the promo code up in there again. In fact, I'm going to write it here. It is promo code TRADER60. Gets you 60%. That's not percent. Percent off first month. I can't spell while I talk. Membership. Normally it's $149 a month. It's $59 your first month. All right, everybody. Shameless plug number 2. Have a great night. I will talk to you guys later. Those of you who are trading in the trading rooms, I'll see you guys back in the room on Monday. Be good, everyone.
Thanks, Corey. Appreciate
Thanks
it.
a lot.
Bye.
Thanks, you guys. Appreciate you. Good attendance tonight. Great interaction. Appreciate you.